consumer price index month over month comes in double what had been anticipated, up 0.6%. Now that is the performance similar to what we saw in the PPI yesterday. Ex-food and energy also a 0.6 rise. In that case, we were only expecting a 0.2 rise.
Welcome back, DubDigital, crypto news and macro trends. Today we're going to do a little something special for y'all. I'm going to tell you what money is, give you a little rundown on its evolution over time, how we've gotten to this point in terms of inflation, but most importantly, how you could turn a bad situation into a positive one for you and your loved ones by thinking a little bit outside the box. What is money? Stop doing all this talking and show me all this stuff. What's money, man? Per Investopedia. Money is an economic unit of functions as the generally recognized medium of exchange for transactional purposes in an economy. Money can be market determined, officially issued legal tender, or fiat monies, money substitutes, and fiduciary media, and electronic cryptocurrencies. Ding, ding, ding. Stick to the end, we talk about Bitcoin. But check this out, guys. Money is essentially an agreed upon thing that we pass back and forth to each other. It represents a stored labor. It's stored labor, stored energy. It's work that you don't have to do. Instead of having to plow the field, you could pay someone to plow the field. Instead of having to go and work and spend 2 weeks to get X amount of dollars, you have that energy stored in the form of the agreed upon medium that society respects. Whether that be dollars, whether that be gold, whether that be Bitcoin, whatever, it's all an agreement. It's a social contract. Money is more an idea than anything, right? It's what we all think is valuable and mutually acceptable at the time. The key word, guys, is think. Money actually throughout history has been many things. It hasn't just been the dollar. In fact, the dollar has been around a short period of time since the idea of money, of wealth, has been around. So guys, money really started way back when we probably had cavemen and all that stuff, and they were probably giving each other special kinds of sticks and stones or whatever. But ultimately, as society got more expanded, people had different jobs, skills, and they no longer were doing everything by themselves, where they were farming, building the house, hunting, all that stuff. Individuals began to specialize in subjects. In order to specialize, they had to stop doing certain things. The baker could no longer go out and hunt all day. He needed to bake. That's how he was going to make a tradable asset. Without a common form of money, everyone kind of gave each other what they thought was a rough indication of that wealth, right? You might trade 2 chickens for 1 goat for 5 sheep, whatever, you know. Sometimes you got screwed depending on if you couldn't find someone who wanted X thing, right? Like if you had a steak and no one wanted a steak, well, guess what? You probably had to overpay about 5 times, and that wasn't very efficient. Therefore, as time went on and civilizations matured, they started putting their faith into precious metals, gold, silver. Actually, silver has been known in human history as money more than gold has. As you can see here, there's been various gold and silver coins throughout history that's represented tangible wealth. Uniform tangible wealth. Gold and silver being those precious metals because they're rare. You have to put labor to pull them out of the ground. They're portable, and they're pretty much indestructible, so they'll last through time, which made them a very, very attractive type of money. This is what we call hard money. Gold and silver is hard money because you can't make more of it. Unlike Mr. US Dollar like you see here. Mr. US Dollar has a very interesting history. We need to go over this, guys. We need to go over this kind of stuff before we dive into the current situation, so you have a strong understanding of what's going on. So as things change in the world, you're not continually looking to other people to find out. You have that knowledge. That's what the rational investor does, guys. You're not looking for a quick, easy buck. You're looking for the understanding. So whenever you're put in a situation, you can use it and rely on your understanding to help make you profit. So as the world used gold, silver coinage, and precious metals as money, it got heavy. It was hard to carry around. People didn't want to go through the forest because they always get jacked. Because whoever holds the gold coin owns the gold coin. In those times, it was very unsafe to have a lot of money because there was no real way of protecting it when you're trying to get from point A to point B. Enter the Knights Templar. Knights Templar set up a system where they set up depositories where people can submit their gold and their precious metals to these places. It'd be held and guarded by armed guys, and they'll say, hey, your gold and silver is safe with us. In exchange for that, Here's a receipt. Once you get to where you're going, exchange this dollar, and our guys over there will hook you up with the same amount of gold that you deposit to us, minus a little fee. This was awesome because people were used to getting like kidnapped and killed and got their stuff stolen all the time. So people are like, thank goodness there's an easier way to do this. However, as time went on, people just kept trading the paper, and the gold and the silver stayed in those depositories. That was like the very, very early beginnings of the Western banking system, guys. We do the same thing today. Put our money into the bank, they keep it safe. As time went on, governments adopted this method by printing paper currencies as representations of wealth, but not being real wealth. And that's the difference. People knew back in the day that this is not my real wealth. It represents that I own real wealth. And just like there's been various forms of fiat currencies, there's been various forms of the dollar. As you can see here, look at this. There's been all kinds of types of dollars. We've tried all different things. Different pictures, different colors, different presidents, different denominations. And the most important thing though, guys, is to remember the representation of the wealth doesn't mean anything if it doesn't promise you the wealth. Fast forward to today, and it seems that that understanding has been lost amongst many people, that the paper is actually the wealth. Incorrect. Paper is usually a representation of the wealth. And up to a certain period in American history, $1 did equal a value of gold. For a good amount of time, the US dollar was backed by gold. You can redeem a dollar into a bank and they would turn around and give you the equivalent amount of gold. That is no longer the case, and many people don't understand that. The dollar is no longer backed by gold. The dollar is essentially a nice, green, pretty IOU given to you from the government. In fact, the dollar is a unit of debt. It's an IOU, which means that the government owes you. The Federal Reserve was given authority to pretty much make all the US currency for the United States. Instead of the Treasury just doing it, the Federal Reserve was allowed to do it at profit. So they pretty much charged the United States an interest rate for the currency they could have printed themselves. But for the large majority of its history, the Federal Reserve was a private institution owned and operated by private interests. What is inflation? Inflation is a quantitative measure of the rate at which the average price level of a basket of selected goods and services in an economy increases over some period of time. It is the rise in the general level of prices where a unit of currency effectively buys less than it did in prior periods. Often expressed as a percentage, inflation thus indicates a decrease in the purchasing power of a nation's currency. What is purchasing power? Purchasing power is the value of a currency expressed in terms of the amount of goods or services that one unit of money can buy. Purchasing power is important because, all else being equal, inflation decreases the amount of goods or services you would be able to purchase.
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. In full cooperation with the International Monetary Fund and those who trade with us, we will press for the necessary reforms to set up an urgently needed new international monetary system. Stability and equal treatment is in everybody's best interest.
No longer was there any kind of gold backing. The government was basing the currency off of good faith of the US government. Whatever that really means. I don't think anyone's quite sure what that one means, right? Because the government's printed so much that this whole graph tells you that over time, the dollar has got less and less and less valuable when you match it against what it used to buy in terms of oil, in terms of commodities.
$22 lower, and that was September 17th, 2001, the day the markets opened after 9/11. So we have now broken that record. it is almost 8% lower. And the S&P is of greater concern to you than the Dow. At 8%, we are now in the range of one of the top 10 losses on a percentage basis in the history of traded markets. So this is very serious.
And these were like huge rifts in the economy. Each one of the events are like gigantic events that shake the economy to its core. They're not easy to go through, but this whole boom bust cycle has been implemented ever since the era of central banking, of the Federal Reserve System all over the globe. And you see how it's affecting you. Not only do you have to live through these types of economic shocks, but your money that you're saving in gets less and less valuable over time. So it kind of negates the point of saving it. Then in the year 2000, we had the dot-com bubble. Internet comes out, all these internet companies are popping off. Everyone's throwing money in it, loving it. Then it pops, and then we had Lehman Brothers and the whole financial crisis in 2008. Okay, all of these were very inflationary because each one of them was pretty much a catalyst that made the Federal Reserve have to print more and more money. They had to do so to cause the gaping holes that were rupturing out of the economy. They're like, they use the printing of money as like a bandage to slap on it when, water starts popping out the side of the boat. And this is the executive order the President of the United States gave in 1933, confiscating gold and making it illegal for pretty much citizens of the United States to own gold and to buy gold. They pretty much took that gold, paid out the citizens $20 per ounce, and said, hey, now we are valuing this gold at $35 per ounce. This is USDebtClock.org. It's a website that monitors the amount of money printed by the United States government. And you see, it's rising rather fast here. United States national debt going on $27 trillion. It's pretty wild because I'm not that old, and I remember a time when the debt was just $21 trillion. I don't even understand what $1 trillion really means. $7 trillion is a lot. Knowing we got $27 trillion and counting, that's not like good. I'm not a math whiz like that, but I know that's probably more than we could pay back. But hey, what do I know? So check it out. The commodity divided by the amount of dollars printed. So in this case, oil divided by the amount of dollars should be around $107 per barrel. Dollar to silver ratio, 4,137. This is taking the available, or what's estimated in the world, amount of silver, dividing it against the U.S. national debt. But the wild part is, guys, this just really accounts for the U.S. national debt. This doesn't account for China, Russia, Japan, any of that. So all these numbers, while they look pretty wild, just imagine that if like something cataclysmic in the financial system ever does happen again, these numbers being thrown out for these assets are totally achievable if you keep in mind all the money around the world, not just in your country. It's pretty insane when you think of it that way.
We probably haven't even begun to grasp it yet as far as the country is concerned. I have said to myself and to others that this is a Pearl Harbor again as far as the United States is concerned, because of the fact that it envisions a whole change in our lifestyle, a whole change in the way this country has been built. But the business community leadership of our country is one that has really let us down, because they've taken us along with the idea that they're going to use that last drop of oil and they're going to use that last bit of metal in order to make the last dollar of profit.
This is DXY. It's an index that tracks the price action of the US dollar. Since 1986, the dollar's had a steep decline. From the top to the bottom where we are currently, it is a 30% drop. So if you had money in the bank account from 1986 to now, you can only buy 2/3 of what you could have previously back then. I wouldn't say the dollar over long spans of time is a good store of value at all. When we zoom up here over like the last decade or so, we saw the dollar gain a lot of strength through 2014 to 2015 because the Federal Reserve between this time frame was printing to reflate the financial system, because it pretty much almost collapsed during the 2008 financial crisis. All the reinflation occurred here, and then the dollar started to gain momentum once again. And over 2015 to 2018, you see there was some dips, and then ultimately a pretty sharp fall. So against real assets, the dollar lost 7% of its purchasing power. So it buys you 7% less silver, 7% less oil, 7% less lumber on average. And then from 2018, 2019, 2020, up until early 2020, the dollar was gaining purchasing power once again. So this could be what looks to me like a dead cat bounce. Severe crash. Okay, so this thing has been falling aggressively in terms of currencies, guys, because currencies aren't supposed to do drastic moves. They're supposed to be stable, right? If they're not stable, they're not good currency. So the dollar has lost this year, since starting its decline, approximately 4%. Holding your money in the bank in fiat cash has effectively cost you 4% of your purchasing power against real commodities, against silver, against oil, against lumber, against Bitcoin. But I think over the next year, year and a half, the dollar can fall substantially. There's a race to cashless, and once we get to cashless, the currency war can really get heated up when they can start devaluing the currency faster, because cash will not be in the way anymore. And this could be represented in my theory on the chart, guys. Look, I think it could fall another 15%. Yeah, but we got gold going to all-time highs, pushing upwards, no end in sight. Gold is always has been a store of value, and then things get really tricky. It's what investors jump back into, but not GLD or SLV or any kind of derivatives of silver, the physical silver, because that is what's going to be in large demand once the COMEX can't deliver its product. And for the moment everybody's been waiting for, big Bitcoin. Bitcoin, it excels in environments of extreme inflation, or at least inflationary environments, because it's like the ultimate deflation paired to the ultimate inflation. It's what ultimately will negate both opposing forces, because Bitcoin has no limit in its ability to absorb wealth. Gold and silver do, because they're not infinitely divisible. You can't split a gold piece up into a million pieces, because it'll blow away in the wind and people will lose it. It's not practical. But with Bitcoin, any fragment of a Satoshi can be kept online. Of Bitcoin, gold, silver, hard commodities, the sky's the limit. There are times that monetary stress and geopolitical stress, they go up because of uncertainty. Bitcoin is used for that reason. Huge liquidity. Gold is used for that reason. The reason I point these things out to you guys is because I believe with the current economic environment, the way things are looking, real commodities, hard assets, are looking to make a price gain against the US dollar. Because of the political actions happening around the world, every single nation taking on more and more of what's already unserviceable debt, the equation looks pretty clear from a macro perspective that if you are all in dollars, I would challenge you to take a look at your portfolio and just look to see if you could hedge yourself a little more to a situation where inflation runs crazy. But that's about it. I'm DubDigital. Give me a like, comment, subscribe if you feel me. Bringing you the hottest crypto and economic content on a daily basis. Talk to y'all later. Peace.